imagine a world where Bitcoin, once dismissed as a speculative fad, becoming the darling of the global financial system. On April 28, 2025, Michael Saylor, the executive chairman of MicroStrategy and long-time Bitcoin advocate, shared a provocative thought on X. When banks finally bless Bitcoin and the experts agree it's a good idea, everyone will want to buy it. No one will need to sell it, and you won't be able to afford it. His words paint a vivid picture of a future where Bitcoin's value skyrockets as a institutional adoption takes hold. But what does this mean for you, the everyday investor, enthusiastic or a skeptic? Let's unpack this vision and explore what it could mean for Bitcoin's trajectory and your place in it. Saylor's statement isn't just a bold prediction. It's rooted in a deep understanding of Bitcoin's unique value proposition and the shifting tides of financial world. As the head of MicroStrategy, Saylor has overseen company's aggressive Bitcoin acquisition strategy, amassing more than 520,000 Bitcoins by April 2025, valued at more than $50 billion. That's an average purchase of nearly $63,000 per coin. A bet that's already paying off as Bitcoin's price continues to climb. Saylor's confidence stems from Bitcoin's absolute scarcity. With a fixed supply of 21 million coins, it's a digital asset unlike any other. As is often said, Bitcoin is like buying a home in a city everyone wants to move in. When the demand surges, the supply remains capped, prices can only go one way, up. The idea of banks blessing Bitcoin might sound far-fetched to those who remember cryptocurrency's early days, when it was associated more with dark web than Wall Street. But the landscape is changing rapidly. A 2022 report from the Bank of International Settlement highlighted the growing role of traditional financial intermediaries in crypto markets, noting that banks are increasingly likely to hold cryptocurrencies in countries with high innovation capacity and advanced economic development. Fast forward in 2025, we are seeing this trend accelerate. Citi's recent report, published just days before the Saylor's post, predicts that the stablecoin market, often a gateway to broader crypto adoption, could grow to 3.7 trillion by 2030, driven by regulatory support and increasing use of payments and remittances. If stablecoins pegged to traditional currencies like the US dollar can gain such traction, it's not a stretch to imagine banks warming up to Bitcoin itself. What happens when banks and financial experts finally give Bitcoin their stamp of approval? Saylor's post suggests a classic supply-demand imbalance. Everyone will want to buy Bitcoin, no one will need to sell it, he writes. This scenario aligns with Bitcoin's design. Its halving event, which occurs roughly every 4 years, reduce the rate of new coin issuance, making the asset even scarcer over time. The May 2024 halving, for instance, cut the block reward to 3.125 Bitcoin, further tightening supply. If institutional players like banks jump in with the significant capital, the demand surge could be astronomical. In 2024, Medium article modeling Bitcoin's value using the stock to flow ratio predicted price of $55,000 post 2020 halving. A target Bitcoin has long since surpassed by 2025. With banks entering the fray, we could see prices climb to levels that make today's valuation look like a bargain. But here's the catch. You won't be able to afford it. Saylor's warning to a stark reminder that the timing matters. Bitcoin's price is already a barrier for many retail investors, with its value hovering in the tens of thousands. If banks and institutions drive prices into a stratosphere, say 500,000 or 1 million per coin, Bitcoin could become ultimate have or have not asset. Early adopters like Strategy will sit on generational wealth, while latecomers might be priced out entirely. This isn't just speculation, it's a pattern we have seen in other scarce assets. Gold, for instance, has long been store of value, but its price pales in comparison to Bitcoin's potential, given the latter's digital nature and global accessibility. So, what would you do? Sailor Pose isn't just a prediction; it's a call to action. Bitcoin's fixed supply means the value proposition only strengthens with the adoption. If you believe in its long-term potential, you might be now might be the time to learn, research, and consider your strategy before banks bless it and the window of opportunity narrows. Future of finance is coming, and Bitcoin might just be at the center. Will you be ready?